We just got wind that Bill Ackman wants to take over 100% of Howard Hughes Holding, which is a real estate developer. And on the news from the pre-market, stock is up roughly $7. Again, he's offering to take them out at $85 per share. Now, before we get into the technicals, stay tuned. We're going to look at some levels of interest, but I want to get into the news. So Bill Ackman's Pershing Square is offering to take over the rest of Howard Hughes. The investment firm does not own for $85 per share. He goes on to say that they're pleased with the substantial business progress Howard Hughes has made over the more than 14 years since it went public. Like the other long-term shareholders and this board have been displeased with the company's stock performance, he wrote in a letter. Now, Ackman proposed forming a new subsidiary of Pershing, which currently owns roughly 40% of Howard Hughes right now. And that would merge with the real estate developers based in the Woodlands, Texas area. Now, Pershing first invested in Howard Hughes in November of 2010 in a $250 million rights offering at, say, $47.62. Over the last 14 years, Pershing's investment produced a 35% total return, or merely 2.2 compound annual return. The company has said and also paid zero dividends since inception. Under the proposal deal, Ackman said Howard Hughes would remain unchanged and continue to be managed by the current leadership team, led by CEO Dave O'Reilly. So the stock's performance over the last 14 years has been very minute, and if you compare that to the broader economic economy, such as the S&P 500, the Dow, the NASDAQ, definitely underperformed. All right, so this is the monthly chart. You can see how price continues to make lower highs. Not good if you are a bag holder. I do like this level on level, but that's besides the fact. Level, what I mean, you have rather this wick over wick. Maybe we'll see that on the weekly chart, see how that was a setup. Now, you do have a pivot low here, but the fact that price could not take out these highs tells me that the sellers are still in control, not the buyers. And so price could trickle down, base, and then further decline. Now, two things to note. I think a bottom would be at this $40 level, as the charts are suggesting. Why? Back in 11, price pulled back, and that was the launching pad for price to move higher. Again, the pandemic lows, price base, and that was the launching pad for price to move higher. Again, the fact that price could not take out, say, this trend line, downtrend line, tells me that there's weakness overall in Howard Hughes. Going to the weekly chart, price is breaking through a trend line. If you want to put it there. Now, I did say I wanted to look at this level here. Yeah, so this was a drop in price, one base and candle, and then a gap, and the gap and go. So drop, base, drop. On above average volume. Now, this was the makings of a weekly sell level. Typically, the set would have been price pulls back and then moves lower. However, on the news this morning, prices are now trading just at the top of that zone. So we'll see what happens when the stock market opens in about an hour and 15 minutes. Let's Let's go to the daily chart. Now, this is what we saw on the weekly chart. So price didn't pull away at least 2x the zone. So this was a quasi zone that was being set up, but it wasn't valid yet. Typically you need price to move away 2x minimum of the zone before it can be validated. Okay, so let's see what happens come the opening bell. Is the pullback just an opportunity to take a short, or will price move higher in anticipation of this $85 target or deal? Thanks for watching. Please like the video.